All right, here now on the phone is Dick Bove. He is from Rafferty Capital Holdings, JPMorgan, Citigroup, Wells Fargo. They all report earnings tomorrow morning. This will be the story as we look to what the market does next. And Dick, it is great to have you on. What's your outlook? What do you think what are they going to report?
Well, I mean, each one of these companies should report pretty strong numbers, not because they're doing better, but because the tax rate for them has been cut by, roughly 1/3. And so the pre-tax number is not going to look anywhere near as good as the after-tax number. And the thing that you have to watch very closely is the net interest margins may be flat to down because consumers simply may not take it anymore. They're being treated extraordinarily badly by their banks because the banks have not increased the rates on deposits, and therefore consumers, I think, will be pulling money out. I think the second thing you have to watch is something called their other comprehensive income, because as interest rates go up, the value of bank assets go down, which is something that people don't talk about too much. But the fact is that, if you look at the one sliver that they give you of what happens to their assets when interest rates go up, you can see that their security portfolios, which is $3.6 trillion, have dropped by $54 billion over the last 12 months, and we don't know what the value drop has been in the rest of their portfolios. So we don't know what the true value of bank assets are today. We don't know what the true capital value is. We don't know that they're not going to be able to see any increase whatsoever in their net interest margin because depositors have simply got to get more. So they'll have big numbers tomorrow because of a tax cut. I don't think they're attractive stocks at all.
Jamie Dimon always tries to make the case over at JPMorgan that the Federal Reserve rate doesn't really impact him because they make, they're based on the margin above that where they're lending money or doing business or anything else. Do you buy that? And do you think that do they care how fast the Fed raises from here? And that's sort of the larger conversation we're having about the market is, does the Fed slow down what it has penciled in? How does it impact this group?
Well, short-term interest rate increases are supposed to benefit banks, all right? And if you're a bank like JPMorgan, which has hundreds of billions of dollars in cash or cash-like securities, it will definitely benefit, the bank. But, the bottom line is the customers, have to pay the higher rate. And, there's a tremendous competition right now among banks to get new loans. So I don't think that they're going to be able to get the yield on loans up by very much, and I'm convinced. Think about it. You have money in some bank account somewhere. You know that interest rates are up roughly 2%, and you got a decision to make. Do I be a good guy and let the banks take 100% of the profit because of the increase in interest rates, or do I tell the bank, you better give me some of it? And the banks are saying, no, we're not going to give you any of it. And therefore, what are you going to do with your money? You're going to take some money out of the bank and put it where you can get that 2%, because why should the banks make all this profit and you get nothing? Therefore, I think that margins are going to be stressed for the banking companies.
That is very logical. I wonder how many people have the time and flexibility and foresight and all of that to do that. I mean, that's total rational behavior. I completely agree with you. I don't know how many people out there really have the time and the wherewithal to do that kind of thing and move around. Last word, real quick.
Well, you can see it in the deposit numbers. In other words, the Federal Reserve puts out these numbers every week, so you can see the fact that the growth rate in deposits, which were 4.5%, 5%, a while ago, have dropped to 2.5 to 2.7%. So, what you're seeing is that people are reacting. They are making the logical decision because, just how long can we play the greater fool game with bank depositors and assume that they just don't have the brains to take the money out and get the higher rate because they love their bank so much they want the bank to take 100% of the profit.
No, as always, you make a brilliant case. Dick Bove, and David Asman is right next to me nodding away. He's been telling us
I did exactly that.
He did exactly this calculation.
I mean, I saw the money in the checking account, not getting anything, and then I saw interest rates going up, pretty much guaranteed 2.5% for just a 3 or 6 month bond. Where am I going to put my money? I don't want to give it to the banks. They've got enough. Jamie Dimon, he's a nice guy, but I don't want him to have any more of my money. Sorry, Jamie. It's not
there
all
you
yours.
go. All right.
I want more
Dick
of my
Bove,
money.
thank you.